Hey, it's Dan Morales, America's Mortgage Man. This is Homebuyer Radio, episode number 145. So I've been doing a mini series on just kind of credit, right? We've talked about, what happens when you utilize a large percentage of your credit limits on, a MasterCard or Visa or a store credit card. And we've also talked about what happens when you have collections that report on your credit report as well, too. Those combination of those two things, or even in some cases, one of those two things, tend to have a pretty significant impact on somebody's credit score, right? So if you have a high balance in proportion to your credit limit, that can tend to take a big impact on, or cause a big impact on your credit score. Same thing is true is if you have, collections. Those collections, especially if they're recent collections, can have a significant impact on your credit score as well, too. Now, I know in previous episodes we've talked about the fact that your mortgage credit score is different than the credit score you would get from, let's say, Credit Karma, or some of these different websites that provide a free credit score out there for you. So it's important to realize that all of these little things, kind of come together to, make up, if you will, your credit score or credit profile. And of course, that credit profile, I should say credit score, tends to have the biggest impact on your overall mortgage rate and terms, and in all honesty, the biggest impact on your ability to qualify for a mortgage altogether. So it's really important that you pay attention to these things early in the mortgage process. Now, it's not uncommon for somebody to be surprised that there's something that's reporting on their credit history or on their credit report that they didn't know about, and then to quickly realize that, unfortunately, that thing that's being reported is having a big impact on them and or their ability to qualify. Now, we've done some stuff with clients to try to help them best position themselves for success. We recently had a success story that I'm very proud of. We had a client that sold their house, and prior to selling their house, they did not get pre-approved for a mortgage. So they sold their house, came into the bank, got approved for a mortgage, but realized that there were some things that were on their credit report that were going to cause them some harm when it comes to getting a mortgage, or I should say the terms of getting the mortgage. I've run into this scenario twice recently. One scenario where it unfortunately cost the clients more money because they just did not have enough time to fix everything that needed to get done. And then had another scenario where the clients were able to pay some debt off, get that debt paid off. We were able to get them rescored. And in this case, we were able to save them 0.5% in interest rate. That 0.5% in interest rate was a big deal, where I had one client that they didn't have enough time. And unfortunately, in their case, not only did they have a lot of frustration, but they ended up having to pay a higher interest rate. Had they done a little more research, a little more homework, and started this process sooner, they could have positioned themselves in such a way that, like client number 2, they could have saved themselves 0.5% in interest rate by being able to have a rock solid game plan to work off of and being able to execute on. Okay. Now, one of the things I always like to say, and I recently had a conversation with my better half here. We're talking about, her question is, of course, why don't people, do some of this stuff sooner, right? Like, why don't they do, some of the legwork? Why don't they, take the steps that are necessary to kind of, position themselves in such a way that they have the best opportunity to win? That really comes down to a lot of times people don't know that some of this stuff is reporting out there. I would dare venture to say that sometimes they don't care until they realize why they should care, or they just are maybe naive as to how these things impact them when it comes time to get a mortgage. So that's part of why, we do some of these episodes in the podcast. That's why some of these things just kind of come up in the course of the podcast and in the course of what I do day in and day out over and over, because oftentimes, people get tripped up on these same things all of the time. They think they have an absolutely perfect credit history, and lo and behold, they're surprised to find out that, there's a collection that's reported on their report that they had no idea about. Or they didn't realize the impact that having all of these credit cards with balances would have, and what, that would mean to them when it comes time to borrow. So, don't allow those things to trip you up. Get started on this process sooner. Realize that, Credit Karma or Credit Sesame or some of these different free credit scores you get are not the same as your mortgage credit score. Oftentimes, your mortgage credit score is lower than what those credit scores would show you, which means that you could end up paying a premium depending on where it is. Now, a really good, competent mortgage lender will go through your credit report with you. They'll help you to kind of figure out, is there a way to maybe pay debt down or to, maybe restructure debt in such a way that you can have maybe a little more favorable outcome and really put you in a better position overall when it's time to be able to get a mortgage when it's all said and done. Now, in the coming weeks, I'm going to bring my kind of what I like to call, credit repair expert in with me, because what happens is, when you have some of these things that are negative that are reporting on your credit report, you're not just stuck with them being reported on your credit report, okay? There are ways to get those things corrected and adjusted so that they accurately reflect the truth, and that, ideally getting those things corrected, removed, adjusted, or fixed oftentimes can lead to a significant improvement in credit score. That significant improvement in credit score can result in terms being much more favorable for you, right? Now, it's important to realize that there's specific ways that you have to go about doing this, and it is really important to realize that that stuff doesn't happen overnight. I have clients who get really frustrated when they go through this process of trying to work on getting their credit, repaired or cleaned up or corrected, if you will. And then they're really angry to find out that this just doesn't happen overnight. Again, this is one more reason why I really highly encourage folks to start this process sooner rather than later. Because if you wait too long to start this process, you can be like that client that I just recently had, where they didn't have enough time to fix everything that needed to be fixed, and unfortunately it ended up costing them in their mortgage. Now, it can be like the second client who did have enough time, thankfully for them, that they were able to get everything fixed in time to be able to save 0.5% in their interest rate. So the sooner you start this process, the better. But what we want to do in the coming weeks, we want to talk about, how do you go about maybe getting things corrected, and what kind of impact can that have on your credit score, and what impact does, let's say, negative credit have on you, and how can you go about maybe reestablishing some credit history to be able to get your credit score higher. It can be hard to reestablish credit history when the credit history you have is stuff that is negative or unfavorable. So we're going to talk about some areas where there are some options where you can maybe reestablish some credit history, whether it's through a secured credit card or it's through some creditors that will maybe take on a borrower with a riskier credit profile, but it helps you to establish some new credit history, which ultimately will help to put you in a better position, not only for a mortgage, but your credit score, depending on where you live, it can be used to price you for, auto insurance or home insurance or any multitude of other types of financial products where your credit score can come into play, if you will. So it's really important that you start to pay some attention to your overall credit health, to what's being reported. Sometimes when people have negative stuff, they just kind of wave the towel and stick their head in the sand and hope it goes away. Well, let's be proactive about getting you back on track, doing the kinds of things that we need to do so that we can help you get to the point where you qualify for the most favorable rates and terms possible, and we can help you get across that finish line with the least amount of stress. So in the weeks to come, I'm going to be interviewing my good friend Sam Parker from My Credit Guy. We're trying to nail down a time that works for him and I to get together and to record a couple of episodes. But if you have questions in regards to kind of credit, things that maybe you've run into personally, we would love to maybe address some of those as part of the podcast here in the coming weeks. So feel free to email those over to me. You can email me at dan@danmorales.com. That's DANMORALEZ.com. So dan@danmorales.com. Hey, again, my name is Dan Morales, America's Mortgage Man. My NMLS number is 709729. You can find me online at danmorales.com. That's DANMORALEZ.com. Phone number is 616-931-4629. And of course, North Point Bank is an equal housing lender.